All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back, and we're going to get started with our morning analysis, and we're going to get ready for the advanced GDP numbers. Now, these numbers, they're going to obviously be fluctuating over the course of the next couple months. The advanced GDP is a number that kind of gives us an early peek to the final GDP numbers, and the market is looking for a bigger beat, upwards of 2.4%. So it is going to be, and like I told you a little while ago, I'm not 100% convinced that we're going to get a great number here, but I am positioned for a good number as I've got some dollar longs on the table right now, so I'm hoping we get a bit better number. But I'm long the dollar yen. Because I just think the dollar yen is just, it's bullish well above 105. Now, the flip side of that is I will go into the number long the dollar yen more than likely. And will I sell the strength? I don't know. I'm not really 100% convinced of what I'm going to do at this moment in time. I'm really not. But what we've got to do is we've got to get ready for today and get our analysis done. So I'm going to start with the euro dollar. John said, "Such a cute couple, honey. I don't like trend lines, babe. My whole career is based on trend lines." That's funny, but no, trend lines are very important to me. They've. I think I told you guys this before. When I was younger, like when I was like in my early 30s, and I almost got vanity plates, the license plates with something on it, and the vanity plates I was going to get is TL Trader, TLTRD. DR, and just because it's I could have put fib trader too, but trend lines is I've based my whole career off of trend lines and fib levels, and so anyway, that's why they're so important to me. They're so important because they're so well respected, and as long as you're using them in conjunction with other things, and I think you can use them obviously effectively. You guys have been watching my analysis for 14 years now, so a majority of you know exactly what I look for. Now let's go into the euro dollar, and the euro I don't think has done anything different, and we have to pay attention to exactly the same levels that we've been paying attention to all week. We have to look at the 108.50 and 109.50, and 109.50 continues to be, this is the previous support here. It continues to be previous support, current resistance. Support is at 108.50, and I think we need to let the market tell us which way we're going to go here. 1.08, whoops, this is easy analysis. A lot of this is going to stay the same anyway. 1.0950. Now let's since we're fairly close to 109.50, I say fairly close. I mean we're not too far off. Let's say we break. Okay, let's say we actually break out above 109.50. Question is, where can we go? Where can we go from here? The initial thought process would be 110. All right, that would be like, okay, well, I assume that's where we're going. And what we probably should do from here is we should take this high, okay, to this low right here, and say, all right, well, 109.50 is the 50% retracement. 109.80 is the 618, and maybe that is probably a more a realistic target if we push just above 109.50, and I think that's possible today. If we have a weaker number, let's say advanced GDP numbers don't come in as strong as the market expects, maybe we do, maybe we do test 109.80. I think it's entirely possible. Okay, so we'll just just keep an eye on that. I'm not convinced that we're going up there either, but I'm just just in case. All right, let's go over to the cable. Now the pound is trading unbelievably heavy. Court ruling in the UK overnight or today. Just allowing the process for Brexit. It's going to allow the process to make it a little bit easier for Theresa May to push the Brexit through. And here goes the pound, closing in on support. Now, what freaks me out about the cable right now is the pound's lack of ability to rally. Okay, it really is very concerning. And what I think what we have to do here, because I was thinking, all right, we're going to get back up towards the 123.25 area, which is the 618 retracement. We haven't even been able to do that. So what I'm starting to think now is that we're seeing some sort of bearish wedge pattern develop here in the cable, which isn't good if you're long the pound. I mean, if you look at this, you start going, oh no, is this thing going to break back down again? The pound is extremely vulnerable. And if you take the low here is at 120.80 and over here is 120.90, we have to write down 120. Oops, this is bearish. We have to write down 120.80, and it's touchable, right? Because if we break that, then we go to new trend lows, wherever the new trend lows are. I mean, 120. People have different print prices all over the place, so. All I know is if we break through here, it's not going to be pretty. All right. This trend line's not perfect, right? It's not. And it may not be drawn like that. I mean, the trend line could be like this, for all I know. Okay. Could end up being like this. But I'll tell you, the pound is so heavy at this point that even any move back up to 122 is going to find sellers, because if you're long the cable right now, okay, if you're long the pound, how badly do you just want out at 122? You know what I mean? I mean, if you're long the cable, you're just like, oh my God, I bought it this week. Like, let's just say I bought it this week, and I bought it at 122 and change earlier this week, and here you are, dropping towards 120. You're probably just happy to get out for break even at this point, right? Or close to. So I think any move to 122, you're going to find sellers. I always try to get you guys to put yourself in the shoes of somebody in the other side of the market, whether you're trading or not. Like I don't have the pound US dollar. I don't have a pound US dollar trade on, but I try to think about it from, if I was long, okay, what would I be thinking? And if I was short, what would I be thinking? Okay, like I said, if I was long the pound dollar right now, it'd be like, God, just let me out of this damn thing. It looks so heavy, And if you're short, you're like, man, I'm going to press it below here. I'm going to press it below here, and I'm targeting 120. So again, you just kind of think about it, from different traders' point of views. Okay, let's go over to the Swissy. Now, I was long the Swissy yesterday. As bonds were selling off, yields were rallying. I bought the dollar Swiss. Now, I'm tempted to buy the dollar Swiss again. I don't really want to establish a position right now ahead of news, because my dollar yen cost average is only a few pips away. It's not like I'm, it's not like I need to extend my, dollar positioning right now, right ahead of the advanced GDP numbers. But I'll tell you, this channel, Nick, who is listening in right now, Nick had pointed this out yesterday, pointed out this trend line, and I did buy it yesterday. I bought it at 99.20 something. I want to say I bought it at 99.24 something. I sold it yesterday at 99.40 something. I can't remember what I got. But I got a few pips out of it. Nothing, nothing to write home about. But I made a few pips just on that channel. But what we see here is that channel's holding pretty well. So 99.20 support. I mean, that's it, right? And I think the risk is if the dollar breaks higher, like following the GDP numbers, okay, the risk is that we push parity, because if you go back to, I'm short, okay, I shorted the dollar Swiss. Now I don't have any dollar Swiss exposure. I'm just, again, hypothetically saying, if I was short the Swiss franc, I'm short because I had this tweezer top, big reversal candle from earlier this week. I'm not getting paid being short. My stops are going to be at parity now. Know what I mean? My stops are at parity now. The risk is if we don't break down and we start to rally, we trip stops above parity and make a move. Now, you guys know that I'm bullish the dollar Swiss, though, while we're above this blue line, this channel resistance, the year-long channel that we'd been in. Okay, this one. But the dollar Swiss is just trying to figure out, hey, am I gonna have a false breakout up here, or am I gonna continue to break out? I think that's what the dollar Swiss is trying to figure out. And like I said, if anybody's short, their stops are above parity now. Anybody on a swing type of basis, kind of a fast money type of trader, they just don't want to risk above parity. Let's go over to the dollar yen. Now the dollar yen, I do have a small, well, not a small, but I have a long position in the dollar yen. And while it trades above 104.85, it's bullish. And all we're doing right now is just bull flagging it, or pennant, or whatever you want to call it. Okay, looks like okay. We're just wedging higher right into the 127% extension. So you go 127% extension. Yeah, if you take a look at the move from 104.40 to 100, we're at the 127% extension, which is 105.40. That's where we've stopped. 105.41 is the 127% extension. The high today is 105.41. Do you guys understand how important that is? Because now that if we break above 105.41, the next stop, if you look at 161% extension, is 106.86. Now you start thinking about, oh crap, 106.86. Yeah, that's going to take us right into this, gaggle of, support resistance. Now, I think that's doable, frankly. Now, I'm long the dollar yen, and so obviously I want that to happen, but I think it's doable. I don't think it's not achievable. We get a strong GDP number, bonds continue to break down, dollar yen's very well bid. It's not stopping. Right? Okay, so with that being said, support is at 104.80, 104.85, Now, I don't think that we're going to 106.86 today. I mean, obviously I'd probably throw a Halloween party this weekend if we rallied all the way to here. I don't think that that's going to be the case. I really don't. That doesn't work. Oh, yeah, that's it. The 24% retracement. That's it. We need to look at that. Okay. You take the high to the low, 24% retracement right at it too. I forgot to point that out. I actually tweeted that chart out yesterday. That was also something that's very important. We're there. So we had a 24% retracement, 127% extension. I tweeted this whole chart out yesterday. Okay. All right. If we break higher, I think the next stop would be 106. Now, again, you have to just start looking at round numbers when you start getting breakouts like this. But 106, and by the way, the dollar yen's bullish. Well, it's above 104.85. This is key support. And matter of fact, we're there right now, but this is key resistance. All right, let's go into the Canadian. So the Canadian crude oil is falling, and the dollar Canadian looks bullish. I mean, notice the dollar Canadian does not want to back off here. Now, if the dollar Canadian, this is the same wedge, kind of like the dollar yen. If the dollar Canadian breaks below 133.60, that's bearish. Okay. If it breaks below 133.60, that's bearish. A break above 134.05 would be bullish. 134.05. That was the high from yesterday. I sold it. I sold my dollar Canadian long. I picked it up yesterday at like 87. I sold it at 134.04 or 03. I mean, I literally almost top ticked that damn thing. That was very lucky. Whenever I top tick something, I don't sit there and call myself a badass, and I don't say, oh, I knew it, and oh my God, I'm so good, or anything like that. Whenever I top tick or I bottom tick the market, I consider myself very lucky, and I need to go run over to the gas station and buy a lottery ticket. Although I didn't do that yesterday. I didn't. I had to go take the kids to go get Halloween costumes, but I probably should have went out and bought a lottery ticket, because I did almost sell the high price in the Canadian yesterday. Just lucky. Lucky, lucky, lucky. All right, when I get back, we'll do the Kiwi, Aussie, dollar index, peso, Swedish Krona, Norwegian Krona. We're going to get all that done here in just a few minutes. So thanks, everybody, for being here. I'll be back in just a few minutes. TGIF. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we've got to cruise through this analysis here really quick. God, crude oil looks weak. Let's see here. I was just looking at crude. I'm gonna look at crude oil real fast, and then we're gonna get back to our analysis. But look at shoot, yeah, okay, there it is. So look at crude oil coming off. Yikes. Yeah, be careful with that. Okay, let's go over to the Kiwi. All right, so the Kiwi is pretty well bid today. We're actually pushing right up against resistance as far as I can see. So this is like trendline resistance. Let me see it right here. I was looking at it earlier, so take that. Take this. We're right up against resistance here. You can see it right there. Okay, so that means that this previous support, current resistance is pretty important at 71.50. Okay, right through here. You can see it, right? All right, so if we can break above 71.50, the next stop would be 71.85. So, and which was our resistance yesterday. You remember that? So 71.50, 71.80 would be the next resistance because we're so close. It could squeeze, especially on a weak number. We can squeeze right back up here. Now support is right here, is basically 81. Well, we wrote down 81.10 yesterday. This low was 81.08, 81.08, and then yesterday's low was 81.07. So, or 81, excuse me, 71.07. So we just have to write down 71, basically 71 cents. I mean, that's just important support. Okay. All right, and we're still bearish, but it's very well bid. I don't like it because it's it's impacting my Aussie New Zealand. It's pulling my Aussie New Zealand down. But the Kiwi is looking pretty strong. I mean, I can't ignore the fact that it is. Now, oops, let's go back over to here, the hourly. So yeah, if we break above this resistance here, that'll take us back to this 71.80 level right through here. You can see the spike low over here, spike low, spike high, it's all same area. But that's doable. It is. If the Kiwi rallies here. Okay. Aussie is trading really heavy, and actually we are on major support. So here's the thing. If we have a weak GDP number, like a weak advanced GDP number, this is the place you want to be long the Aussie. Now, I don't necessarily want to buy the Aussie dollar, but I'm just saying that this is triangle support. The flip side to that is, if the advanced GDP number is strong and we break through 75.50, this thing is toast, because you guys know the false breakout above the highs twice now. So I can do this. Oops, not that. The false breakout above highs tends to lead to a breakdown. So 75.50, we break below 75.50, you can stick a fork in the Aussie. It's done. It's done, and it's going to kill everybody, because if there's one thing that I know is this. I've seen major bank analysts show this on multiple occasions over the course of the last couple of months. Everybody is looking at this. Shoulder, double-headed monster, shoulder, we're breaking out. I've seen that come out of multiple bank analysts over the last couple of months. So what does that mean? Well, that means everybody's looking at it. What does that also mean? Well, it probably means that everybody's positioned for it. What does that mean? Well, that means if we break through 75.50, they are all screwed. So, you know what I mean? So, below 75.50, the wheels fall off the bus in the Aussie dollar. Okay? And my 2 cents is, if we drop below 75.50, it is going to absolutely crush people. Okay? It's going to crush people across the board. And I think we have to be very, very well aware of it right now. Because if we break below 75.50 and we close below 75.50, I have to put on some Aussie dollar short going into next week. Okay? Okay. Um, this dollar yen is so strong. We're right up against the highs. Um, so I think I personally, I think the Aussie dollar is at risk of a complete meltdown. Okay. MK said, as Paulie would say, the wheels fall off the caboose. That's right. The wheels would fall off the caboose. All right, so 75.50. Okay, so where's resistance? Now let's say the advanced GDP numbers are weak, and again, I'm not convinced that the numbers are going to be strong. Even though I've got some dollar longs on, I'm not there. I'm not convinced about it. Okay, this is resistance right now. 76.10. Is in a range, but we're threatening to go bearish on the Aussie. Let's go to the dollar index. I firmly believe that the dollar index crushed people yesterday. We had this, oops, that's not what I want. We had this reversal in the dollar on Tuesday, right? Turnaround Tuesday. We had a reversal of the dollar shooting star. I actually shorted the dollar. I went long the euro and I went long the pound. And fortunately, I made money because I got out of it when it was down here. That was like one of the harder trades that I've done in a while, trying to fight this trend. Well, I'm assuming I wasn't the only one. I'm assuming there's a lot of people that are like, oh, screw that. I'm shorting the dollar because the dollar is done. It's toast. It's rallied too far. Fed ain't going to raise rates, whatever, whatever the argument is. And this move up here yesterday was a quintessential I'm screwing you move because you shorted too strong of a trend. And now you got the dollar yen breaking out. So the risks are the same, but I think the risks are now a little different in a certain respect that I'm not expecting a move down here in the dollar index. That was a hopeful move. That was a, man, I hope the dollar gets down here so I can buy it. But I'm not as hopeful of that anymore. Right now, I hope the dollar dips down to here so I can buy it. 98.20 is support, 99.10 is resistance. Same stuff. 99.20, or no, 98.20. 98.20 is support, 99.10. I'm going to say that it's major resistance because if we break above that, it's going to be hard to stop the dollar madness. Okay? And the dollar is bullish. Because if we break through this 99.10, we're probably going to challenge the 161% extension, which is up here at 99.75 and channel top. I honestly didn't think we were going to make it up here. I really, really didn't. I thought we could eventually make it up there, but I thought we'd have to dip down to the breakout point first before getting there. The way the dollar is acting right now, and you can go, well, Blake, relative strength is divergent because we talked about it the other day. It is, but we're not. Hold on, grabbing my pen. We're not as overbought as we have been in the past. We're nowhere near here above 80. We're not even above 80 on relative strength yet. So if you don't think that the dollar can go up higher, it can. And relative strength can break higher from here. Now we start getting above 80 in relative strength, that's when I start to get really worried about the dollar strength. But look, if we punch from here, where we're currently at, to the top end of this range, relative strength will probably get to 80, and then you have to start getting worried about being long the dollar. Okay, dollar peso. There's nothing really to do here. I almost bought it yesterday, at 81, and I didn't. Almost bought it at 81 yesterday, or no, 71. I'm sorry. Almost bought it at 71 yesterday, and I didn't. I missed the boat, and then it rallied back. I mean, this peso actually looks pretty damn strong. You know, this is the this is the pro-Trump trade right here, and I really want to be long because as much as I don't want to see it happen, I don't want to see Trump take the presidency. I don't really want to see Hillary Clinton either, to be quite honest. But I definitely don't want Trump. I'm not a Trump supporter. You know, and you guys know that I'm just not. Okay, I'm just not a fan. Anyway, but I still think he can pull it out of the hat. Okay, and so if Trump takes the presidency, this thing's going up here. Easily, like maybe 20, and I actually want to be long the dollar peso going into the election as a precautionary measure. Okay, because I'm thinking that we might get a rally up towards 19 and change before the election. Then obviously, if Donald Trump takes the presidency, this thing's going way the hell up here. So I kind of want to be in that trade, but I just I haven't been able to buy it. And yesterday I was going to buy it when we were down here, and I got sidetracked looking at other stuff, and I was dealing with the yen, and so I wasn't paying attention when it blasted higher. So right now I think we could do this 1870 to 1888, and that's it. 1870, 1888, and we're in a range. Okay, let's go over to the US dollar Norwegian Krona. Now, the US dollar Norwegian Krona is at risk of a breakout here. I know we wrote this down yesterday, but I'll just do it again. I think we can write 829. I was writing 830, but I think we can actually safely put in 829. With crude oil pretty weak, and then testing the breakout point is possible at 820. So 829, 820, 820, 829. We're in a range, and then we can go over to the Swedish Krona, and just so you guys know, the Swedish Krona rejected big resistance here. It's right here. US dollar. I tweeted this yesterday through Forex Analytics, and I retweeted it. So we hit the monthly 618. 618 right there at 906. Basically, we hit it. We went to 908, which is just a little bit of an overshoot, and then we're back down at 902. Doesn't surprise me. Now I would expect that offers really great resistance right now, but we're bullish here, so any dip down to 895, 895, oops, 895 will be support. Resistance is 9.0, was it 9.08? No, 9.09, 9.09, and that should be major resistance in this very bullish move. Okay. All right, guys. Your bias chart is done. Let me see if I can answer a couple of quick questions before I'm going to put you guys on break before this GDP number.